Very good afternoon, everyone. Welcome to yet another uLaw webinar. Today's webinar's topic, Disbursements Demystified, has been accredited for 1 hour of CPD credits, of professionalism credits, in the provinces of Ontario, British Columbia, and New Brunswick. So for our friends who are joining us today from these 3 provinces, this session will be accredited and available to you to report and get 1 hour of professionalism credits. You just have to search for Disbursements Demystified in your corresponding Law Society portal, and you should be able to log in those hours. Okay? Some housekeeping. Please do use the chat window as always. If you're new to us, please do use our chat window to ask any questions. And if you would kindly request to mute your phone lines if you can, that would be awesome as well. Like every other uLaw webinar, today's webinar has a very specific agenda, and we're going to talk about what are disbursements, how do we manage them. We're also going to talk about specifically disbursements and managing them out of the trust account. What are the benefits of doing that? How do you manage disbursements from your general account? Some of the benefits of doing that as well. And some of the types of general disbursements. So we're going to talk about the opportunity that you have depending on the type of expense that it is, whether it's a great candidate for an expense or disbursement, sorry, from your trust account or your general account. Actuals are always a great example, for example, for a trust account. For just the court fee and it's on actuals, $100. You can't charge up or charge down, then it's probably best to do it from your trust account if you can. Obviously depending on the nature of the matter and if you have a retainer to begin with. But then we're definitely going to talk about those different types. Then finally talk about the expectations from the Law Society when it comes to disbursements. Okay? Now we have done sessions before where we talk about expenses, both client expenses as well as office expenses. But in today's session, we're going to predominantly talk about the matter-related or the client expenses, which are the disbursements. Okay? Okay. So we'll start with a simple definition, and we've done this even before in our previous slides as well. But in terms of just defining what a disbursement is and also how does it relate to your business, it truly is the act of paying out or disbursing money to run a business, that is very specific to a client. So expenses incurred by your legal office for a client, and I will go one step further and also say for a client for a specific matter as well, because journals and ledgers and the reports that you generate, as granular as you can get, the more efficient the reporting is and the more prudent and straightforward the data would be also for your business. Okay, so it's really, on a layman's term, it's really disbursements are nothing but expenses that are incurred on behalf of a client by your legal office. Okay. The bottom line in terms of both accounting as well as Law Society requirements is that you need to manage and maintain the record keeping and the proper books, which are the journals and ledgers, but more importantly, ensure that you record them as and when they happen. Ensure that you're invoicing so that you are documenting that that particular transaction happened so that you can then recover that expense. Okay? One of the fundamental importances of disbursements that it is definitely an expense incurred by your law office or legal office on behalf of your client, but it is most certainly a recoverable expense. Okay? Okay. And the reason we're kind of chugging along slides is to keep it straightforward, set the context, and maybe spend a little bit more time demonstrating how you would report these expenses and the documentation that goes behind it. Okay? And at any time, please feel free to ask us your questions using the chat window, and our support staff would be happy to answer them. Now, how do we manage these disbursements? Okay, what does it really take to manage these disbursements? Are there any best practices? And those are the types of things that we're going to be covering in the next few slides. So if you really look at some of the key steps in reporting or managing disbursements, So let's take there's a client that you had a client intake, you've created a file or a matter for that client, and let's say it's a fairly simple small claims where you have a flat fee plus a very standard disbursement such as an application fee. Depending on the nature of the matter, you have the opportunity to disperse either out of your trust account or your general account. If you're in the business of accepting retainers, and if you do manage and maintain both the trust account as well as the general account, then you most certainly have the opportunity, and we'll talk a little bit more about the types of expenses that are best suited for the trust account. But let's rule out the option where you're not dealing with trust account at all, you don't have a trust account, you're not into the business of accepting retainers, and it's just work done, and then you're invoicing the client, and you're recovering the entire set of fees and expenses. Let's take that example. In that example, it would be a straightforward disbursement out of your general account. So you would spend the money ahead of time using your general, either your own pocket money or whether it's money from your business, pay for that application fee up front, and then generate or produce an invoice that has recorded that transaction, let's say $100 application fee to your client, and then obviously ask and recover that $100 through that invoice. You ask your client to actually pay you for, let's say, that $500 legal fee plus a $100 application fee. You should expect that $600 paid back. And once you've done that, then you can use that $100 and pay off, whatever is your expenses that you paid out of your office. Okay, so that's money made back. Now, it's important that you track, record, report, and cover. Okay, so those are the terminologies really. And the reason for that is, let's say you did spend that money ahead of time, and you don't track them right, and if you don't record them right, you are not going to be able to recover that in the appropriate time. Because if you've done that in a specific month, and if you're not able to recover that in a specific month, then obviously it does affect, in a way, the expense book, in a way, profit and loss of your business as well, right? And at the end of the day, if you can't do it on time, you may actually stand to lose recovering that expense in totality, which means that would then have to be a write-off for your business. Okay, the worst case scenario is you spend the $100 on expenses and you just cannot recover them in time, right? So to avoid those situations, you definitely want to keep in mind a discipline of first understanding your business, the silos of practice that you plan to focus on, and based on the nature of those silos, determine whether you want to take the risk of paying for these disbursements using general ahead of time, or whether you want to incorporate trust to begin with, where you can accept a retainer for that $600 ahead of time, the $500 for your fees and the $100 for your expenses, and pay out those disbursements straight from your trust. No hassle, no worries. You don't have to do any invoicing in that matter. You're not waiting to recover. You still have to invoice, but you're not waiting to recover. You're just doing a trust transfer. The bottom line is you record the disbursements that were paid, how it was, very important, and the reason for that expense. Was it an application fee? Was it a court fee? Was it a fax expense, a mileage? What was the reason for it? How did you pay for it? Did you pay it out of your own pocket? Did you pay out of your business's credit card? Or was it paid out of your general account via check? Okay? And most important for any transaction is, when did that disbursement occur? Was it the 25th of May? Was it earlier in the month? Important aspects capturing the essence of that transaction. And further along, outside of these 3 or 4 main areas that you capture, you also want to record the specific client name, and even more important, for a client, the specific matter for which this disbursement has occurred. And I stress that because you could have a single client and multiple matters. Very important that you capture the disbursement by the matter, though it's for the same client. Okay? And if you have paid from the easy example that we took about the general, simple example where you actually paid from the general account, you've got to decide what portion, or if you're going to include that in a recurring bill cycle, when should you include that disbursement? We recommend that you do it as and when it happens, okay? Ensure that it's clearly documented in your retainer letter or your engagement letter to begin with, so you have a signed document between yourself and your client that outlines that it is the obligation of your client to pay you for these disbursements. Very important. That's the starting point for everything else. And as mentioned earlier, make it a habit to record them, most certainly invoice them, because that is the legal document that truly outlines both your effort and also the disbursements that have been involved in that matter that you've already paid for. So that a combination of the legal document, which is the engagement letter, and the invoice together gives you the right to recover that expense. Okay? Now the question is, if let's take the other example where you as a legal professional do have both a trust account as well as a general account, which means that you are in the business of accepting retainers. Then the question is, why not pay straight from the trust account? That's a great question, but there are certain candidates of types of disbursements and situations that are more natural to dealing with trust disbursements compared to dealing it with general disbursements. So if you want to keep it fairly simple, and let's say the nature of the business does assist that simplicity, an example of a very straightforward expense that are great candidates for a trust disbursements is the court fee. A court fee, the amount is determined by the ministry. You don't determine whether it's $50 or $100. It's a set fee. You can't upcharge on it, so basically you can't make a profit on that expense. Basically, it's just money in and out. And if that is the case of that disbursement, then it's a good candidate for you to explore using the trust account. So as I said, a great example is that of an application fee. If your particular file only deals with having simple fees and an application fee disbursement, where your fees kind of includes all your travel and, fax expenses, let's keep it that way. And if it's application fee is the only thing, you can just make it part of your retainer letter to say it's $500. Let's say in this case it's plus HST of another $65 being your legal fee. You know for a fact that it's going to be about $100 to do that application fee. You can't go up or down. So in total, it's $665 is pretty much what the client would have to pay you in the context of this matter. Accept it as a retainer up front. Okay? Put that money into your trust account. Docket all your fees, the $500, whether it's billable or flat rate, whatever. We can do that for $500, and it's going to be for $65, $565. Transact that disbursement straight out of your trust account. So just write a trust check for $100 for that application fee, so that money is taken right out of that trust account, and you don't have to recover that $100. It's already there for you to take, and it's never your money to begin with, so it's just in and out. Very simple if that's the situation that you're dealing with. Okay? That's why we say it's not your money after all, so just show them that as part of that invoice you did that trust disbursements. That way there's a track record of that, so that the client recognizes that $100 is used for that expense. But it's still equally important that you capture the day when that expense occurred. Very similar to the general expense. When did it occur? How did you pay for it? Was it a trust check? Right? What was the amount? Now there are certain expenses that are tax exempt, so whether tax is included or not. Then we talk about, again, who was the client that you paid this for and what particular matter. So whether it's trust or general, the points of data that you capture remain to be the same, whether that's transacted out of your trust account or whether it's your general account is really the question. Okay. All right, so before we jump into this slide, so let's take a look at some of the types of disbursements. And we've quickly defined some best practices and some candidates for you to consider if you're thinking about doing disbursements from your trust account or your general account. Okay? So let's say there's a billable. Again, we talk about actuals, court fee or application fee. You could use both trust and general. Okay? If it's a unit rate, so let's say it's a fax, or if it's photocopies, and these are types of expenses where it's its unit rate. It's at $1 per copy or 50 cents per fax. Then it's a great candidate specifically for a general account. Mileage, yet another great example to keep it very specific to the general account. Travel time, if you're a paralegal or a lawyer, travel time, or if it's one of the contractors that you're using, and his or her travel time, again, a great candidate to keep it very specific to general, which means you pay for it up front and then generate the invoice, record that, show it in the invoice, and then recover it. The bottom line really is any recovery of expense on actuals, both trust and general, great candidates. If it's with a profit margin or a loss, in some cases, then specifically general account. Again, if it's an outsourced consultancy that you're using, someone like a standby or stand-in, if it's on actuals, they charge you $100 and you disperse, and if it's $100, that's all you're going to charge your client, then you can do it out of trust. You can pay that consultant a trust check right out of your trust account. But for whatever reason, if you're looking to make a margin, profit margin, or for some reason you're going to lose money on it, right, then again, it's going to be out of your general account. So if the expenses are on actuals, trust and general are great candidates. If there's going to be some differences with some margins, then it's only general. Okay? Alrighty. So the last question or the slide that we have to talk about is perfect. What is the perfect time and when should I recover my disbursements? And what's the best way to do it? I did mention it early on in my slides share about how you do it. It's all through showcasing, tracking them, and showcasing it in an invoice, generating that invoice, sending it to your client. So how you would do it is basically through that invoice. That's your legal document. Okay? When do you recover the disbursement? That's a good question. It again goes back to the nature of the matter, the type of engagement that you've signed up, whether it's a retainer-based or just a simple engagement-based. But a simple thumb rule or a best practice is capture the disbursements transactions as and when they happen, and have a discipline and a set, I would say, a documented discipline of when you would generate it. So you can say, if it's an ongoing matter with, let's say it's a corporate matter, and there's a set amount of expenses every month, and if you're set out to bill them on a monthly cycle, then make it a part of that matter to disperse them, including all the disbursements in that particular month, and generate an invoice. If it's a fairly simple and a short-lived matter, a great timing would be to generate these invoices, including the disbursements, as and when they happen. We're kind of doing a complete invoice that pretty much takes out everything that's occurred in that time period. Okay? If it's flat fee with a disbursement, then obviously a closed file is another example. And there's contingency-based, where disbursements can be separate. Again, those are some examples where you can do them either on a periodic basis. The fundamental bottom line is how and when you recover your disbursement does have everything to also do with the initial engagement retainer letter that you've signed up with your client. So make sure you document and draft that properly and follow the same thing when the cycles that you use to generate invoices and recover the disbursement. Okay? What are the let's quickly recap some of those steps. Record the expense. So let's say that court fee happened. You paid for it. You record it. Let's say you paid for it using your business credit card. I'm talking about a general expense. pay for it upfront using a business credit card. Okay, record that with all the information we talked about. Include it in your invoice. Send that invoice over to your client. And then based on your payment terms, follow up with your client to request for that payment. Okay? In some expenses, you may also want to determine if there is a markup or a markdown. Okay? And last but not the least, very important, keep in mind the taxes, because certain expenses are tax exempt, certain expenses do include taxes, have taxes extra. In the case where a trust retainer was involved, so let's say you accepted a $1,000 retainer at the start of that file, and you now have a $100 disbursement, and if you've not done it through trust to begin with, and you've done it out of your general account, then the one extra step that you would have to take is you have to record that general disbursement, send the invoice, and instead of waiting for the client and following up to pay you that $100, in this case where there's actually a retainer sitting in your trust account, you have what is called as the eligible trust transfer. And that is where the $100 that you have spent is the eligible amount that you can now move from your trust account to your general account. And you can do it as a legal professional, you can do it right away. As soon as you've generated that invoice, you've now freed up that eligible amount, let's say $100 in this case. You've freed up that $100 to be moved from your trust account to your general account. You don't have to wait for your client to pay you because they've already paid you upfront as a retainer $1,000. Okay? That's about the subtle difference in how you would manage paying yourself versus transferring money, eligible trust money from trust to general. Okay. Kind of comes to the back end of our slide share, and then we'll jump into an actual demonstration. I think it's fairly simple. We spoke about how you manage disbursements, the information you capture, how often should you disperse and make it a part of your invoice, etc. And that's all from a practice management standpoint for you as a legal professional. But why do all of this to begin with? And what documents and reports are you obligated to produce when time comes to audit, or when types of documents that you are required to store on a periodic basis? Okay, and we're going to start share how we can demonstrate the generation of these documents as well. One of the fundamental documents that are involved specifically with regards to disbursements are your disbursement ledgers. Okay, so whether it's from trust or your general, the disbursement ledgers are important documents that are required by you to produce. Now, each and every transaction, again, regardless of whether it's trust or general, needs to be recorded in these disbursement ledgers. Depending on whether it was trust or general, it would be a trust ledger or a general ledger. Okay, fairly simple. Each ledger would also have a running balance by date. So basically saying, all right, I got a $500, I took away 100, hence there was 400 remaining, took away another 200, there's another 200 remaining by the date. And we've got the simple sample from the bookkeeping guidelines document of the Law Society of Ontario. But let's take a look at a trust ledger. And then this is an example of a simple general ledger, okay, where you basically have a disbursement of $65 that's transferred to Taylor. In this case, there's a trust transfer that was done of $565. In one case, where it's a general payment, the other case was basically a trust transfer. But we'll look into these documents a little bit more into the demonstration of the product. Okay, so ledgers are two documents, trust and general, and then we look at journals. Now, a small difference between, or I would say a difference between a ledger and a journal is that the journals also record the method of payment, and the purpose. So we did capture that during that transaction. The method of payment was either check, business credit card, cash, whatever that method was, and the purpose, court fee, application fee, fax, mileage, travel, whatever that purpose was. Though these two data points are captured extra in a journal. So if you look at the particular journal here, there is stationery, obviously not a great example for disbursement, but more importantly, the particular of what was it for, who was it paid to, and the method. So it's using check 002. Okay? Okay. Another important document that captures the disbursements involved is the fee book. Okay, the fee book records the fees, not only the fees, it also records disbursements that were generated or part of an invoice that need to be recovered from the client. Okay? One extra item that the fee book does capture is the invoice number. So which invoice had the particular expenses as part of it to be recovered? Because when you ask your client for that $100, traditionally your client's going to say, all right, which invoice was that part of? Right? So that's when you're going to tell them, oh yeah, that was part of invoice 1001, that $100 expense that he's still not paid you. So invoice numbers are very important so that you can easily reference that whether you have to, especially when you have to recover that payment from your client. Okay? So you look at the particular fee book as provided as an example by the Law Society, past date, the invoice number, who was for, the actual fees billed, and the disbursements billed, and the HST billed as well. And if you don't have a HST account, then you obviously don't charge HST. Okay, so that's now we've fairly set the context of disbursements, very specific to disbursements, right? So we're not talking about offenses in this webinar. We're specifically just targeting client expenses or disbursements and just sharing the types of or the opportunity you have to use either the trust account or the general account to disperse. And based on the nature of that transaction, understanding what extra steps that you would have to take to recover that money. And then last but not the least, the set of documents that you would have to generate to keep Law Society happy and for you to be very compliant and peaceful at mind as well. Now, why even consider a legal accounting software, whatever that software may be? Legal accounting softwares allow you, obviously, to capture events as and when they happen, very critical. They record financial records and bank records as close as possible to give you the opportunity to either import bank records or in some cases they allow you to directly tie in with bank records so that it gives you a simple way for you to reconcile. Okay? But most important, the software does a good majority of the job in not only collecting the HST, but if you're also using the product to generate the invoices, it's obviously collecting the invoices with the taxes that you've raised. But if you're also using the legal accounting software for business expenses, the other side of the house, then it's also capturing the HST that you have paid as a business, automating the whole tax owing, tax that the government owes you or you owe the government, right? So if I've collected $100 from my clients and I've actually paid $200 back to the government owes me $100 back in HST. So it makes HST filing far more simple. And last but not the least, legal accounting software, because it does both sides of the house, keeps you compliant, very much accountable, and gives you the important pieces of business data through analytics or other means that allows you to make proactive actions to continue improving upon your business, which is critical for growth and sustenance. Okay? And again, there's got to be a few other advantages based on the different products that you explore. One of the advantages of the product uLaw is that we do provide single-click reporting that are in line with the Law Society's bookkeeping guidelines and the compliance rules across various different provinces. There could be other software that have their own advantages that they provide. The bottom line is, if you're a legal professional and you're in the market looking at a software, do consider the option of exploring a legal accounting software that can actually do a very compliant and an accountable way of managing your data. Okay? And perfect. I'll kind of shift gears to start my demonstration in the next 30 minutes or less than 30 minutes that I have. For those who don't know who we are a Canadian legal accounting, practice management, and a business accounting software based out of Ottawa. We have the pleasure of serving many of our client legal professionals across the country, and we do offer a no obligation 30-day trial for you to come and check us out. So do visit our website at uLawPractice.com, and do provide us your feedback on this specific webinar or any other webinars that you look forward to seeing. You can actually go to our website, uLawPractice.com/webinar, and we pretty much list down all the webinars that we provide on a monthly basis. Okay, so we're doing the disbursements today. Next week we're going to be doing, specifically talk about our mobile app experience and the analytical capabilities of that. Okay, and you are able to sign up for these webinars, and we provide a minimum of one CPD session of 1 hour a month at no charge. In today's webinar, again, for those who just joined us, today's session webinar is accredited for 1 hour of professionalism credits by the, as it says in your email, by Law Society of Ontario, British Columbia, and New Brunswick. Okay? All right. So let me use a playground account that I often use in my demonstrations of one Mr. Roger Moore, his legal professional. And maybe we'll walk you through a simple life cycle, maybe take a couple of examples because we do have the time. Maybe take this example where we're only dealing with general, and we'll take another example of trust and general mixed so that you can get a better flavor for it. So as a prerequisite, step one, let's go ahead and do a simple client intake. And so we'll start with getting a client in, creating a file, and then moving from there. Okay? So step one, we'll say add new contact and add into my clients, Mr. Hulk Hogan. Okay? I'll say Mr. Hulk got to know me because of client referral. Okay. And we'll give Hulk a simple address. It is important that you capture a communication address as per the Law Society's guidelines. We'll say that's his work address and it's his mailing address. And we'll skip the phone number, but you can most certainly provide a phone number and start to use it right from your uLaw app as your legal phone book. It also allows you to quickly import phone conversations as dockets at a later time too. So in this case, I'm going to go ahead, I'm going to click on Save and Matter, which essentially would save this piece of information. We would update it into your database for this particular client. And then let's now create a matter or a file, whatever you like to call it, for Mr. Hulk Hogan. Okay? Okay, we do have a quick question in the interim. Is the session being recorded and available? Most certainly, yes. Good question. Leon, I did mention, so I will mention it again, that this particular session is being recorded and will be available on our YouTube channel. What I would recommend is if you can kindly send us a note or a quick confirmation of your presence in this webinar, we can actually just email you the link as well. Okay? So I've gone ahead and created the matter. So let's start with a small claims matter, and for the same Mr. Hulk Hogan, we'll say Hulk. Okay. Go ahead and save that file so that uLaw or any legal accounting software should give you a file number that you can now reference. Very important that for the specific client, Hulk, you're being more specific about the file and the type of, in this case, we're also capturing the type of area of practice that you're dealing with. But the disbursements and the record keeping would now be specific to Mr. Hulk and also specific to this file. The file number being HH35248, which is a small claims matter. Okay? Now let's assume this is a simple example where there's no trust involved. Okay, so you're going to do all the work up front and then generate an invoice and recover that expense through a client payment. Okay, so let's say there's only general involved. In uLaw, with the new user interface that we've provided, you basically just follow the money. Okay, so let's first docket let's say this is a flat rate, small claims matter, initial client meeting. I'll say I spent maybe an hour on this particular docket, right? And I'll charge an hour as well at about $135 an hour. It's pretty cheap for Mr. Hulk. So what I'm going to do is before I even go ahead and generate that invoice, I'm going to say, I think that rate is a bit too low for Mr. Hulk. I'm going to change that to $235. Okay. All right, so right away, oops. We'll just wait for it to be saved. So it's taken the 235 plus the HST in this matter, and it's said it's about 265 owing right now. Okay, so let's just start the first meeting. Let's say we do a final meeting. Let's assume we did this yesterday, and today is the final meeting. After the court visit, and we'll say we spent maybe 2 hours. We're going to charge them another 2 hours for it. Okay? And let's assume there is, a bunch of different types of disbursements because we're going to be doing general. Let's take some examples of maybe fax, travel, and we'll also do a actual so that you can see you can do it both ways. And in the case of this matter, since it's mostly general, so we'll click on the general tab right here, which pretty much allows you to pretty much report all of the work that's done. So it's either a deposit in your general account, or in this case, it's not a disbursement. It's got to be money coming out of your general account, and hence a disbursement is a withdrawal. So we'll say first, it's actually on actuals. So we'll first do an actuals. I will say there's an application fee of $100. And we spoke about how certain expenses don't have taxes. So I'll say it's a tax exempt. Just keep it simple. And then, as we mentioned about what you capture in your data so that you can report it into your ledgers and journals is who did you pay this to? Okay. First is method. Okay. We spoke about how a journal captures the method of payment. So it could either be a bank or this could be your own pocket money, owner's pocket or cash account. So in this case, I'll say this is a business credit card, my TD Gold. And I will say, who did you pay this to? I paid this to the Ministry of Finance. I used a credit card. And if there's a reference number, I can put that in. I've captured the date, the purpose, the amount, I've mentioned that there's no taxes. How did I pay for it? Who did I pay this to? And I hit save. So the first step in disbursement is recording it as and when it happens. Now you're going to notice that not only do we have $796 worth of legal fees, you now have an extra $100 of disbursements that you have to recover. Let's go ahead and put another example. Let's say this is a mileage. I'll just say fax. We obviously know that a fax is a unit rate, so we automatically change data entry. I'll basically say it's 100 faxes at about $1 a fax, and I'll include the tax in this case. Okay? So now you've got two different types of general disbursements. One was a mileage. One was actually a unit rate disbursement for a fax, and the other one was an application fee, I believe. Perfect. And let's do one final disbursement. Where I'm actually paying a third party. So I will say court visit. I'm charging my client $110 plus tax. Let's say this is a markup expense. So this is where I spoke to you earlier about if it's a general expense, depending on the nature of that particular disbursement, you have the opportunity to do a profit margin or maybe a loss, depending on your situation. So let's assume you only paid $100, but you're marking it up to $110 to your client. You're making about $10 there. You're paying it to a consultant firm, and you say, I'm paying it to Megan Consultants. Again, using my credit card. So this is another example of a general disbursement. The only nuance to this disbursement is that there's actually a markup. So you're charging your client $10 more than what you actually paid for. Okay? Reporting that type of expense consultancy is also a great example. Now, if you have certain silos of business, so for example, real estate or family, and if you're using third-party software to obviously using during your and you prepaid for it, you can also use the option of prepayment to disbursement, where you could basically say whether it's a TerraView or process server or DivorceMate, whatever that may be, you can actually use the prepayment as well as an option to pay for those disbursements. So let's say you got a package of 10 licenses for $100, now you're charging each client $15. You can do that like that as well. So for the purpose of time and lag time, let's quickly recap. So I've got three different types of disbursements. I've got an application fee for $100 that's on actuals, no tax. I've got a fax, the unit rate disbursement, general disbursement, which is with including tax. And then I've got another type of disbursement, which is a third-party consultancy that I've paid as a legal professional, but this time it's with a markup. Okay, so three different scenarios. Now, once you've recorded these disbursements, we spoke about the next thing to do is obviously generate that invoice so that it can become that legal document for you to reflect what you have to recover. So to do that, let's go ahead and generate an invoice. We recommend, and it's a really good habit, if you can generate a pre-bill, whether it's a law firm, legal firm, if it's a solo practice, no matter what your situation is, always generate a preview. A preview in uLaw is a harmless document that does not generate an invoice, but kind of just gives you a feel for what it would look like. But most importantly, it gives you the opportunity to ensure that you've captured all the data in that particular invoice cycle. So let's say there was 2 legal fees of an initial meeting, a 235, a final meeting that happened of 235 as well for 2 hours, and in total 705 stocks. There's the 3 different disbursements. It puts this little preview watermark so you don't accidentally send it to your client. So in total, it's about $337.30 of disbursements is what you have to recover through a client meeting. Okay, so it clearly tells your client, Mr. Hulk, you owe me $1,000 and $133.95. So let's assume that you're happy with this invoice and the data that's in it to actually generate the real invoice with the complete button. It's basically going to take all of the transactions. Or if you want to do a very specific date-based invoicing, you can do that too. You can backdate this, and you can say I want all of the dockets or disbursements that have occurred on or before the 24th. So if I were to do that, what it's going to do is it's only going to take that initial client meeting. It's only going to pick that particular docket. It's not going to pick up any other disbursements at all. Okay, so the backdate just gives you choosing the date range of your dockets and disbursements. But in this case, I'm going to do a complete. I'm going to pick it all. And I'm not going to do a preview. I'm going to go ahead and I can choose different themes. I'm going to go ahead and click on the invoice button and wait for my invoice to be generated and available for me to download, which is a kind of a simple 2-step process in uLaw. I'll hit the download button. Now this generates an actual invoice that includes the legal fees and, most importantly, the disbursements that I have to recover. Okay, so it has an invoice number, has the $796 legal fees, and $337.30. A few important things is if you do integrate uLaw with third-party payment gateways, you can actually send this invoice electronically via email, where Mr. Hulk Hogan would open up this invoice. He can electronically sign this, and when Hulk opens it, he can actually pay for it using his credit card at his own leisure by just clicking on this link right here, right? So, you know, the other way of doing it, the traditional way of doing it, is you follow up. Let's say you have 15-day payment terms. You follow up in 15 days and ask Hulk to either pay you, send you a check, or maybe you take the credit card via phone. But a much more newer way and a more self-serve way is that Hulk can actually click on that link and pay for it. It has the invoice number, has the actual amount, and you can basically just enter the details, okay, and pay for it. So I'm going to skip doing that just as an example. I'm showing it to you, but I want to quickly reflect on some of the documentation and the reporting. So let's go into accounts real quick. And let me do, as you can see, the ledgers, the journals. So we spoke about the client's general ledger. Or I can do it specifically for a client, or I can do it for a date range. Now to keep it simple, just to show you the importance of the data collection, I'll do it specific to a client. I'll say Mr. Hulk Hogan. Thankfully there's only one. And let me just download his general ledger. Okay. So what you see from Mr. Hulk Hogan for that specific matter that we worked on, Hulk was his rest of the world, is the capture of the 3 disbursements. Okay, and this is what's captured in the letter. The date, the particulars. In this case, this was a $100 disbursement, as you know, for the application fee. That was the legal fee. We're going to skip that for now. You can see how clearly we label each transaction based on the type that is. So right away, the disbursement tag, you recognize that it's a disbursement. There's a fax of $100 plus tax. Then there was this court visit for a consultancy that you paid, $124.30. Okay? This particular is a professional CPD session. Fantastic. So here is our general ledger that we automatically give you the opportunity to generate. Okay? Once you've given us all the data, the beauty of the legal accounting software uLaw is that it produces all of those reports at a click of a button. Okay? So let's look at the journal. And let's say client's general journal. Again, very specific to Mr. Traditionally, what you would do is you would do it for a date range. So you would do it for a month. You would have to, periodic basis after your reconciliation. But just for the purposes of highlighting a point of how the data that you entered automatically has turned into these reports. Now, why is there no journal? Because that had not been paid for, right? You haven't received the payment yet. So let's go ahead and accept that payment. So let's say you're on the phone, you call Mr. Hulk. There's multiple ways of doing data entry in uLaw, whichever is your way of doing it. You can actually just say deposit in a general account and accept the client payment. Or if you're used to, you can continue using clicking the question mark and using the payments option here in red. So let's assume Mr. Hulk pays you in full, and he gives you his credit card number over the phone, and you've paid for it, or you can basically just collect it right here. Or let's say he's sent you a check. Let's keep it simple, and you've deposited it into your general account. You can provide him a payment receipt. Really good discipline to do that. And you thank him for the business, and now you've fully recovered that particular, including all those disbursements and the legal fee. Now you've done that. So we'll give him the payment receipt so that you and the client can then sign off on it, that he has actually made the payment. So there's no issues of him coming back or you having to go back. You sign this, client signs it, file it, we're all happy. So let's go back to looking at the Law Society's documents and reports. We looked at the ledger. Let's look at the journals now. Again, I'm looking at the receipt journal from a general standpoint, and again, specific to Mr. Hulk Hogan. Now you see that payment that was made of $1,133, whatever, 95 cents. Importantly in the journal, as we mentioned, was the method. How did he pay for it? He paid using his check, as well as the person that you received from, and what was the reason for it. Now we go one step further, and we also provide the file number, which is actually, we go one step further to tell you that this was for the specific file, not just specific for Mr. Hulk Hogan, because Mr. Hulk can have multiple matters, right? Let's not stop there real quick. Let's go back into my journal, and I can actually do a payments general client's journal. Again, I'll do it specific to Mr. Hulk Hogan so that you kind of see the trail of data. And there you see, you've got the $100, the $796, the $113, as well as the $124 by matter, file number, client, and purpose. We obviously have the compliance panel that you can always use to generate these general ledgers and journals if you like. General disbursement. That'll be the last document I show you. and I'll kind of move on to using a trust as an example. If I were to use a client general disbursement payment journal, for the sake of it, I'll show it to you for a date range for this particular month, which then lists down for the month of May all the transactions that I've had. If you look at the Hulk Hogan matter, you've got paying the Megan consultants, you've got paying the application fee, $100, okay? All of the information is captured right away. So let's go back to this. Hopefully that drove home the point of how you would manage disbursements if it was a simple matter that actually where you did the work up front, you paid all the disbursements up front, you generated an invoice, got yourself paid, you recovered that money, and then uLaw as a legal accounting software then provides all of the Law Society reports and journals and ledgers. Okay. We also provide the expense. We spoke about the fee book. The right under compliance, you have the fee book, and if I capture it for the month of May, that fee that you, including the disbursements, are captured well in the fee book as well. So here are the 3 transactions for Mr. Hulk Hogan: the $100 without the tax, the $100 plus the tax for your fax, and the $110 with the markup with the tax, $14.30. So just a click of a button is all it takes once the data is in. The same thing applies when you have a matter that is specific where there's a trust involved. So let's assume for the same client, within the next couple of minutes that I have, let me quickly create a new client. We'll create a simpler matter. We'll say new matter. I'll say this is a POA, speeding. Now let's assume in this case we kind of recognize, because this is kind of a flat fee situation most of the times, that there is a $565 legal fee involved in reducing your fine and maybe a $100 court fee that's involved to go and pay the fees for the court. Okay, so let's assume there's sort of that $665 of total fees that the client would technically pay for, and you're going to accept it as a retainer up front. So in case where it's a trust involved, we'll go into the trust. We'll say deposit into the trust my retainer. I would say, all right, let me get that $665 up front. Assume he paid a check. I will go ahead and deposit that $665 into my speeding ticket. Okay. Now let me go ahead and docket $565 as a simple flat fee. Okay. Speeding matter, court visit, documents drafted. Let's say legal professional has done his job. I'm going to charge a flat fee of $500 and say I spent maybe 2 hours of my time. Really profitable matter. I'm just going to go ahead and docket that effort. Okay? So it's going to be 500 plus 65. 565 is what was taken away from the projected balance. So you had 665. It's not the actual balance, but at the projected balance at the rate at which you're docketing. Now let's take an example where let's say it's an actual court fee. So again, go back to trust. It's a withdrawal from trust, which is paying the disbursements from trust. In this case, I know it's $100. There's no taxes. There's actuals. Again, but still I'm capturing the date, the amount, who was it paid for, how did I pay for it. I used a trust check. I'm going to say it's a court fee. Who did I pay to? Ministry of Attorney General. Okay. I can even print this check from uLaw, so you don't have to handwrite it anymore. You can just brings out a little leaflet-looking document that you can print, leave your actual check in your printer, and saves you some time. Okay. So let's go back where now, if you noticed, that $100 you did not have to generate an invoice. Technically, it's taken it out your trust account directly. So what's left for you to do is generate the invoice for that $565 of legal fee only. So by doing it through trust, you're just basically, it's money in, money out, and you just have to ensure that you record and show it to your client so that they know it. You can even mark it as paid at the time of even generating the invoice if you want to be very, very transparent and clear about your communication with your client. And all that adds to the professionalism that you showcase as a legal professional, right? The clarity with which you send information. So this particular invoice is for specifically the $565, but also records the $100 that was taken away. So let's take a look at this particular invoice, and then I'll jump into showing you the ledgers for this transaction. So there's $500 of fee, including my $65 tax. Fantastic. Now let's quickly look at this section where it highlights the total retainer that was accepted into the trust account. And now the disbursement for this particular court fee was taken directly out of the trust account, leaving the trust account with $565 as of this date. And now with the $565 legal fee being involved, right, the final balance is $0. And by marking it as paid, you clearly tell your client that he or she doesn't have to take any, in this case it's a he doesn't have to take any action, it's already been paid for. Now the last step in the puzzle is like how we accepted the client payment in the previous example. You made a call or he sent you a check, right? In this case, the $100 already left the trust account. The remaining $565 legal fees needs to be moved, and that is the eligible trust amount or pending trust transfer, but the eligible trust amount that then gets transferred from your own trust account into your own general account. Okay? So let me go ahead, click on transfer button. I'll say specifically the $565, because again, keep in mind the $100 was taken directly out of your trust account. I'm just going to say I wrote myself a trust check, and I did that transfer. If I look at my ledger, we still capture it. If I look at my client trust, and this is my trust ledger for Mr. Hogan. Talks about the speeding, where I received the $665. Now the $100 was directly taken, again, tagging as a disbursement, was taken direct out of your trust account, leaving your balance of $565 as of this date. And on the very same day, there was a legal transfer, trust transfer, for this legal fee of invoice that we raised for $565, leaving the balance at $0. Same thing happens when you go into your journal, seat, client trust journal. So you can start to appreciate how, as a legal professional, a legal accounting software accommodates the intake of all the information from you, and then in the background provides you with the relevant reports and documents that are meaningful and are important for you to be compliant as well. Where you didn't have to generate these files manually, the software did it for you. Okay, so very much this is the receipt of $665 into trust account. And last but not least, we'll look at the journals for the client's payments. And also do it specifically for Hulk Hogan. There you go. You've got the $100 to Ministry of Attorney General as a disbursement for the specific file. Keep in mind this was for the specific file. It was different from the 862 is different. This file is different from the different file that we had for Hulk Hogan, which was for the small claims matter that we had. Okay? That's very important that the disbursements are specific to a matter or a file. Okay, and hopefully with that, we were able to provide you with insight of how you can plan managing your disbursements in your legal office. We spoke about using trust and general. We walked you through examples of how you would create a client, Mr. Hulk Hogan, and actually deal with a completely general-based disbursement. And then we showcased how you could maybe use trust depending on the area of practice and the nature of the business. Okay? And at the end of the day, the legal accounting software uLaw gives it to you in a template that's compliant with the Law Society's guidelines. It also gives you the peace of mind that at any time you can generate these documents at a click of a button, provided the data entry follows real life, and that's a given, a prerequisite that you capture data. Very important. As and when it happens, disbursements happen to be even more important because in many cases you are required to recover this. Okay? Once again, we'll thank everyone who joined us today in this webinar, confirming that this webinar has been approved for 1 hour of professional CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Please email us your participation so that we can then send you a personalized link to the recorded version of this session. Also, for audit purposes in the future, if you need us to keep a track or tab on the CPDs that you attended, sending that email to us would also go a long way so we can help you. Thank you once again for your participation, and have yourself a great weekend.